Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Monday. What's up, everybody? Hope you're having a great day. It is Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, coming at you with a froggy voice today. A little bit under the weather, so please bear with me just a little bit. Friday, I wasn't even able to speak, so believe it or not, this is better. If you're new to the channel, do me a favor, hit the subscribe button, hit the notification bell. Every day, we look at the markets and we identify potential breakouts and reversal opportunities from an educational perspective. S&P this morning, we were up about 8 points. Today, Friday, we had a pretty decent sell-off in the morning, a rally in the afternoon, and now we're kind of chopping along in between our levels of demand and supply. So I would say that there is a potential, based on some of these upper wicks last night, for a breakout above this area here to get a little run, if indeed we do get a little bit of a pop above there. Not a great level yet. I would still need some more basing up in here before that would be viable, but it is something worth looking at and something we can think about. NASDAQ, same basic picture. We've got a little 15-minute level of supply up above us here, but you could look at this area here. And really what I'm paying attention to is the fact that we've got some rising lows, so potential for a breakout does still exist above that area. Crude oil. So in crude, we have on the hourly chart the level up here, and we set a little alert in to see what does price look like on an arrival up to that region, but we've actually sold off pretty much all night. Now, in that overnight sell-off, we had this little level right here, which is typically going to be one of my favorite setups, this little base drop below a pivot high. But look at this 3 a.m. candle, how we retested that area and then dropped away from it again. So by retesting this area and dropping away from it again, what it does is it invalidates this level for a second test. I really, this would be an area that I would instantly wrap my lines around. But the fact that we were all the way down here, retested it, and then moved away, I can still use this, but it has to be a confirmation entry because it's no longer going to be a fresh entry point. It's already been touched once by the wick of this candlestick. Wicks are important. Don't forget about the wicks. So that's a possibility for a short entry for today. In gold, I've got a couple of levels above us that I'm still holding and waiting on. Not quite there yet. Looking at our bonds and currency markets, there wasn't really a whole lot to speak of last evening, so not a whole lot I'm going to cover today on those. We're actually chopping around in between major levels in pretty much all of our bonds and currencies. And so the 10-year note, we're in between our supply and demand levels. The Aussie is sitting above a potential breakdown point. The euro is below some fairly quality supply. And then the Canadian dollar is in between levels of demand and supply. Now, if you notice, all of these markets, they all have something in common. And what they all have in common is the fact that the most recent price action, no matter which one I look at, they all have the same most recent price action of nothing. And that is not the easiest thing to trade. Matter of fact, it's probably the hardest thing to trade directionally when you're looking at futures trading. And the reason for that is because 15-minute levels, 5-minute levels, they tend to get blown right through because somebody with enough money is just out there actively picking out the stops of individual traders. Now, of these four markets, the best one I think is the Aussie setup for a potential breakdown below here. As we are getting some basing below this level or in front of the level, I think we could see a breakdown below this area in here. Stop it, have to go somewhere up above here. So keep an eye on that one for today. So other than that, not a whole lot to report. In the Great British Pound, we were looking at this one last night as a potential play. If somebody was super aggressive and wanted to look into this one, it's kind of in between those sides, and it just didn't do a whole lot of nothing overnight. So it's kind of in between some areas as well, and it looks just like the other markets. So really, no reason to do anything on either one of these markets today until we get to these major levels of demand and supply. Once we get to those levels, then it makes sense. The Japanese yen, we actually did have a little area set up, this wick over wick level. Price did come into that area, and we got a pretty nice move away. So if you took that one, then you were rewarded with that one. We actually had a decent move into the level, touched it, couple of candlesticks that chopped sideways, and now we've had a little move away. If you took that one, take your stop, move it down to probably above this wick here, as you got a nice little trade out of that one. So other than that, we have a fair amount of equities positions that are equities and options trades that are coming to fruition. So keep an eye on the trade feed for today. And then if you guys have any questions, please send us an email, support@tradersarmy.com. I will talk to you later.